I don't know if the people behind it intended for it to be this way, but the way that movie came off was essentially like, oh, here's a cute story of like a thing that happened, and like it painted it as though nothing came of it. It painted it as though it kind of ended. It didn't say anything about all the research that we learned, any of the like critical things about like the market manipulation, like the biggest financial crimes of our lifetimes.
All right, here's the story that we've been told about GameStop, a struggling video game retailer that has become the target of a massive short-selling campaign by major Wall Street hedge funds. Short selling, by the way, is a common Wall Street practice by which they bet that a stock will go to zero, making billions for themselves as companies implode and workers lose their jobs. Think Toys R Us, Sears, Blockbuster, just to name a few. But this time around, a group of retail investors on Reddit, led by Keith Gill, aka Roaring Kitty, aka Deep Value, uncovered the huge short interest in GameStop, and believing the stock to be undervalued, they started buying up shares en masse, driving up the price and quote-unquote squeezing the hedge funds, even causing one notable fund, Melvin Capital, to go bankrupt. To stop the bleeding, big Wall Street investment firms allegedly colluded to do shady things like disabling the buy button on trading apps like Robinhood to prevent retail traders from buying up more shares. But in the end, things were all good. We were told that David stuck it to Goliath, the little guys won, the hedge funds learned their lesson, covered their shorts, and the GameStop saga was all over. Now that's the story they want us to know. That's the story that mainstream media told us. That's the story the movie Dumb Money told us. But you think the mainstream media in Hollywood are about to tell us the real story? I don't know. My guess is nah. So naturally, I met up with my homie Ian Carroll, known to many as Cancel This Clothing Company. He's one of the most prominent voices in the GameStop community to figure out what is the real story, and is it even over yet?
Good to finally sit down in one room.
This is a long time coming, man.
First off, I'm not giving anyone financial advice. Don't fucking trust me. I'm an idiot. And I'm not a good investor in the first place. I'm just a dude.
So what's the biggest misconception of GameStop that people get wrong?
Maybe the biggest one is that it happened in 2021. That it was a short squeeze that happened and it ended.
According to many in the GameStop community, the supposed short squeeze covered by the mainstream media and depicted in the movie Dumb Money never actually happened. In a report published by the SEC in October of 2021, their data showed that most of the buying activity did not originate from traders with large short positions. Quote, whether driven by a desire to squeeze short sellers and thus to profit from the resultant rise in price, or by belief in the fundamentals of GameStop, it was positive sentiment, not the buying to cover, that sustained the weeks-long price appreciation of GameStop stock. Interesting that this little tidbit did not make its way onto CNBC or the movie Dumb Money.
I don't know if the people behind it intended for it to be this way, but the way that movie came off was essentially like, oh, here's a cute story of like a thing that happened, and like it painted it as though nothing came of it. It painted it as though it kind of ended. It didn't say anything about all the research that we learned, any of the like critical things about like the market manipulation, like the biggest financial crimes of our lifetimes.
On February 9th, 2021, 2 weeks after the stock price first exploded, FINRA, the Financial Industry Regulatory Authority, posted a short interest of 226% for GameStop, meaning that the stock had been shorted more than twice the total number of shares in existence, evidence that the shorts had not closed their positions. However, over the next few weeks, that number would drop drastically with no explanation, without the correlated increase in price that one would expect in a short squeeze. And today, short interest for GameStop still sits at approximately 10%, according to data published by Yahoo Finance. How that happened, nobody knows for sure. Kind of a mystery, but many in the GameStop community says the evidence points to
someone committed a crime.
Allegedly.
Meme stocks like GameStop and AMC.
Meme stock massacre on Wall Street.
It's meme mania.
Meme rally.
Meme stock.
Meme stock.
Meme stocks. That phrase is a constructed, essentially propaganda technique in order to get regular people to not question what's actually going on, to not look any deeper at the price movement, and it's been very effective.
The The term meme stocks is often used by mainstream media to describe stocks like GameStop, whose prices surged, they say, due to widespread attention and coordinated buying by retail investors on social media platforms like Reddit. But if that were true, the price movement should be correlated with retail buying sentiment. Looking at data released by Fidelity, one of the largest retail trading platforms, this chart shows the month of July 2021, despite the overwhelming majority of orders being buys, the price of GameStop didn't go up, but rather it went down or traded sideways. During Roaring Kitty's first live stream in 3 years, the price of GameStop was doing all sorts of crazy things, going up, going down, trading sideways, even halting several times. All the while, he didn't buy a single stock or exercise a single option, and was just having a good time drinking a beer, perhaps proving that meme stocks might be just a propaganda campaign meant to possibly obfuscate from something darker, in this case, in the figurative and literal sense.
Huge portions, 50% and more of our regular trades don't even go to the open markets where everyone's actually exchanging goods for prices. They go to dark pools where, like, Ken Griffin has this private little spot in the back where he will buy your trade, send it over there, and match it up with something else at whatever price he thinks is good, you know, quote unquote. And so that means that's not affecting the price of GameStop stock. And over the last 3.5 years since 2021, if you look at the amount of off exchange, meaning dark pool trading on GameStop, it's like 50% and more every single day.
Is that legal?
Yes, technically it's legal.
In the US, a market order at a retail platform, well over 90% of those trades go straight to the dark market, to a wholesaler that bought that order flow rather than competing trade by trade.
So 90% of retail trades, according to SEC Chairman Gary Gensler, goes into dark pools. He said it, I didn't. And we're still supposed to believe that GameStop price movements are because of Roaring Kitty and Reddit?
That's a bunch of malarkey.
But a more serious question beyond meme stocks is, if 90% of trades don't impact the price of the stock, what's the point of the stock market at all?
The whole point of the stock market is that the price is supposed to reflect our sentiment. But these days, the price just reflects algorithms and big institutions just manipulating all those prices while we get on the in and outs, because we essentially become, like, all the money has to come from somewhere, right? Like, if you have JP Morgan and Goldman Sachs both trading on a thing, you know, they could just take each other's money back and forth, but it'd be a lot more effective if they had someone, a sucker, like retail, us regular investors, basically become their entrance and exit liquidity so that they can continuously siphon our money collectively out of our pockets and up into theirs.
The shorts believe the company's worthless, but the longs think it's going to the moon. Long term, I think the bear case is right. GameStop is a brick-and-mortar video game retailer at a time when people increasingly download their games off the internet.
A critical pillar in the mainstream media narrative is that regardless of the strength, persistence, and resilience of the GameStop community, it was still a dying company that will go bankrupt one day. And thus, one narrative largely ignored by mainstream media and Hollywood is that of Ryan Cohen, founder of Chewy, the online pet supply retailer, who acquired a substantial stake in GameStop in late 2020, believing that the company had untapped potential and pushing for a radical shift in GameStop's business model. He would later join the board and become CEO of the company.
You guys have a documentary out right now, I think it came out yesterday, called The Meme King, calling Cohen a meme king. He's the Queen of Hearts, you know. I don't think he has the first clue how to turn this company around.
Ryan Cohen doesn't have a clue, except today the company has in its war chest over $1 billion in cash and almost no debt, with the company achieving profitability for the first time since 2018.
Ryan Cohen brought this whole other narrative from Chewy that he had built as this activist investor that's well known for being able to take on a company like Amazon, being able to totally turn company, like being able to totally like change the game. And he's young, so he understands video games, he's motivated, he's dedicated. But we've never in our lives, never in the history of the markets had a company with a investor base of like regular household investors to the tune of like hundreds of thousands of people that are rabidly like with the CEO and the stock and won't sell for any reason and buy with like every paycheck. There is no one wants to talk about how valuable the GameStop community is for a stock, because that is undefeatable.
So A, the shorts never close, or at least that's what the theory is. B, meme stocks might be a made-up term by the media to get you to not think too hard about the market doing weird things. And C, under Ryan Cohen's stewardship, GameStop doesn't look to be going bankrupt anytime soon. So what's next?
Well, we know for sure that they didn't close. And we know now that they have all these complex ways that they can hide those short positions for long periods of time. And we are seeing evidence that they're kind of trapped. Because like if you let the price go down too much, everyone was still buying. And the more we buy, the more trapped they are. And if they let the price go too high, then their margin gets more and more underwater, and pretty soon they get a margin call and then they get blown up. And so they can't do anything as long as we don't sell.
The MOASS theory, the mother of all short squeezes, as presented by folks in the GameStop community, suggests that GameStop stock could experience an unprecedented surge due to the extreme level of short interest, coupled with the speculation that hedge funds have been hiding their short positions through various methods, such as using dark pools and obscure financial instruments, which have masked the true extent of their shorting. And as retail investors continue to hold and buy more shares, the demand for these shares only increases, creating a situation where short sellers must buy back shares at higher and higher prices to cover their positions. This, they say, could lead to a potential explosive rise in the stock price, resulting in astronomical gains for those holding the stock, orders of magnitude greater than what we witnessed in 2021, while causing massive financial losses for the short sellers and possibly bringing the entire system to its knees.
I would like to point out here that we have come dangerously close to the collapse of the entire system, and the public seems to be completely unaware of that, including Congress and the regulators. There's a whole
short interest reporting.
Short squeezes. Sorry?
You're saying that is the short interest reporting. That's what was happening here? That was the problem?
I mean, I imagine this goes beyond GameStop, right?
Way beyond GameStop.
And so if they do look into it and let's say they regulate, then couldn't the whole system just completely collapse? And
absolutely, that's the problem. And so like, just to be clear,
they actually fixed it.
This is not about GameStop. This is GameStop is not the only company getting shorted. Like the entire market is full of manipulative short selling that is a lot of it naked and a lot of it fraudulent. And it's not just short selling too, it's derivative exposure. Like the market is just so riddled with fraudulent transactions that are obscured behind these and that's what the GameStop people started to discover, is it's not just that they naked short sold GameStop, it's that the actual mechanics of the market that we're all taught are normal are actually completely fraudulent. And if you were to arrest them all or stop them all or force them all somehow to close their short positions all at once to like close up all these fraudulent transactions, the market might collapse. Personally, I think I'm optimistic. I'm super optimistic, both for my GameStop holdings as well as for the market in general and the future of I think that we're all on a good path. But do your own research and come to your own conclusions.
This beer is for Keith, by the way, because I know he.
Shout out Keith. Keith
Yeah,
is the
there you
man.
go.
Keith is so the man.
I support retail investors' right to invest in what they want, when they want. Support the right of individuals to send a message based on how they invest. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company. Thank you. Cheers, everyone.
That's it for me this week. I want to thank Ian Carroll, aka Cancel This Clothing Company, for sharing with us his knowledge and research. Keep in mind, everybody, that this is just one take on what the real GameStop story could be. I would definitely encourage folks to do their own digging, do their own research, and to reiterate once again, this video is purely informational, perhaps possibly entertaining, but definitely not financial advice. Now, what are your thoughts? Sound off in the comment section below. If you'd like to support my work, please take a second to hit that like button, share this video with as many people as you can, subscribe if you haven't already done so, and hit that notification bell if you so choose. As always, I'd love to thank you for your time, and I'll see you in the next one.